What's up, guys? So today we're going to be comparing different investment services. So what are the difference between the investment services? What are the different fees associated? And what's best for you? Let's get into it. So before we get into the different types of services, we're going to be talking today about two specific types of investments that you can hold. First would be a mutual fund. So a mutual fund is essentially set up by a financial institution or a brokerage, and it consists of a series of different investments that are always changing and differing day to day. And the goal of this is to essentially beat the market or outperform the stock market. And each individual institution will hold their own mutual funds, and you can hold the money within those funds to create them. So the second type of investment we're going to be talking about are ETFs. So they're similar in mutual funds in that they hold different types of stocks and bonds and things like that. But the big difference is that it's generally going to be built as a portfolio, and then that set of investments is always going to be the same no matter what. So if you buy one share of an ETF, you'll kind of always be invested in the same thing. And until you either sell that share, buy something else, switch it over, whatever the case may be, you'll be invested in everything that ETF is invested in. The next thing would be fees. So what are the different types of fees? How are you charged these fees, and where do they come from? What are the two different types of fees? So you'll have what's called an MER, or a management expense ratio. So a lot of the time with mutual funds, the management fees, the fees for the mutual funds and everything will all be mashed in together because it's usually the brokerage that's creating the mutual fund you're investing in. So that's why they put their fees together. And then with other services, you'll have an MER for your specific ETF or other type of investment, and then you'll have an associated management fee. So now that we know the two different types of fees, now we can begin to talk about the different types of investments that you can be in. First would be traditional banks or traditional brokerages. So generally speaking, most people that deal with their day-to-day banking institutions will have an investment arm that essentially acts as a brokerage. A lot of the time they will have their own mutual funds, and when you invest in them, you'll be investing in their mutual funds. So a lot of the time for these mutual funds, the MER is going to be a lot higher than what you'd see if you went with another type of investment. This is because they're personal investment managers there taking care of all of the accounts. They're buying different stocks, they're buying different bonds, and they're involved on a day-to-day basis. So a lot of your MER is actually going to paying salaries and commissions and things like that for legal fees, for these investment managers, for portfolio managers, and other people of that nature, basically anybody who's involved in the fund. So in 2017, Morningstar sent out a report based on previous years' fee index of all of the brokerages and all of the investments held in Canada. So the results that they came back with was the average MER fee is about 2.23%. So this means if you have $100,000 invested, you're going to be paying $2,230 per year on average on fees. So the next type of platform is an online brokerage. So just like the banks that you do your personal banking with have investment arms that have mutual funds and portfolio managers, most online banks will also have an online brokerage. So what this generally is a lot more flexible platform in which you can go on and you can purchase individual stocks, bonds, ETFs, and things of that nature. These big banks will have their own different accounts that you can hold and their own different platform for signing on and dealing with all these different accounts. The fees for this can range anywhere from $0 for some online platforms all the way up to $10. So I believe right now TD Direct Investing is $10 per trade. So when you buy or sell a stock, a bond, an ETF, they'll charge you $10 for each transaction that you do. So in contrast, you can have other management firms that are now coming up in Canada, such as Quest Trade or one that I've used is Wealth Simple Trade. So these ones generally will charge you $0, so you pay absolutely no fees. As long as you're managing everything yourself, they charge you no fees on anything that you're doing within their platform. The obvious advantage of these smaller firms like Wealth Simple is that you have $0 fees. So you can actually go in as long as you're willing to spend the time and the effort of doing the research of your own ETFs, your own bonds, and your own stocks. You can actually trade and you can hold investments absolutely free of charge. And if you want to hold this in a TFSA or an RRSP account, you're more than free to do so. And then you still get all of the tax advantages of holding one of those accounts. So the last type of investment platform I like to talk about is what I call Robo Investing. So Robo Investing is actually an online platform that is created to work off of an algorithm. So you'll essentially have pre-programmed software in the background working for you, doing your trades for you, and for this, they'll charge a fee. Some examples of some of the bigger guys that are doing this in Canada would be a Quest Wealth, or again, I'm with Wealth Simple. So these are really cool strategies for someone who doesn't want to pay the big fees of working with some of the big banks and working with their mutual funds, but still wants the flexible and passive freedom that a robo investor can offer. Then this might be a great alternative for you. So some of the fees associated with this, you'll generally have a management fee. So that's what the company themselves will actually charge you. And then on top of this, you'll have an ETF MER fee. So just like mutual funds, each ETF is created by somebody. And for them putting this portfolio together, they'll actually charge you a fee for this. So Wealth Simple, I'll use that because I have the most experience. It's the one I use personally myself. Has some of the lowest ETF percentage fees for the ETFs that they choose, and they come in at around 0.2%. And then on top of this, you have the advisory fee structure. So the way that it works with Wealth Simple is anything under $100,000 Canadian invested is a 0.5% fee. And then anything above the $100,000 threshold, you actually get what's called the Wealth Simple Black. And then they will drop that 0.5 to 0.4%. So overall, you'll be paying between 0.6 and 0.7% on average, depending on what you're invested in, which in contrast is significantly lower than the 2.23%. So to use the same example that I used before with $100,000 invested, if you're at 0.7%, then you'll be paying only $700 instead of that around $2,300 that we mentioned before. So you can already see there's significant savings in using a platform like this. All right, so now we've kind of went over the 3 different investment styles and the 3 different types of investment platforms. As an overview, you have a traditional brokerage or bank, generally using mutual funds, so higher fees, but you'll have access to portfolio managers, investment managers, financial planners. So really can give you a really good education on the things you're investing, start planning for the future and things like that. You have an online brokerage, which will generally be a lot more in your ball in your court management. So you'll be buying your own ETFs, your own stocks, your own bonds. So you can actually get these online for free and they cost nothing on an ongoing basis, but you have to do a lot of your own research. You have to know which ETFs or which stocks you're buying, and you have to really be up to date or else you can lose a lot of money doing this. And then the third and final one would be what I call Robo Investor. With Wealth Simple anyway, you actually still do get the benefit of being able to call a human and you can talk to an actual associate and you can talk about some of your investments, how it works. If you want to transfer a locked in account like an RRSP, you can call and they'll actually take care of the fees for you if you're over $5,000. A little bit of a cool tip there with Wealth Simple. And the online or over the phone human will actually help you with any needs that you have and help you with transfers and things like that. So you're not exactly all on your own. And then you also do have significant savings in fees. So it ends up saving you a lot of money over the long term. I'd like to just do a little quick case study to see how much of a difference fees actually make at the end of the day, so that you can make a better informed decision when you're thinking about your investment and financial future. For this example, we'll take someone who's, say, 20 years old. They want to retire when they're 65, so that means they'll have 45 years of savings. Do that on both different examples. And then the person can afford to save $500 and invest it at a certain percentage. So first we're going to take $500 a month, 45 years, at a 6% annual rate, which is pretty average for the stock market. If someone were to take that over 45 years, you'll actually end up with a total balance of $1,311,194.48. So it ends up being such a quite sizable sum of money for retirement. We're going to contrast that with the same $500 a month, the same 45 years, but instead we're going to put that at a 4.47% interest rate. So the way that we got that is you take their 6%, and then you minus the 2.23% minus 0.7% from the 6, and then that lands you at the 4.47%. So if someone were to do that, you'd have a total end balance of $842,994.46. So that will actually give you a net difference of $468,200. So you're actually losing a third of that income just by paying management fees. To me, that is just absolutely mind-blowing, and I don't know why you wouldn't just always try to pay the very bare minimum of management fees, because in the end, it's going to equal so much more money in your retirement, and you're just going to have so much left over for you at the end of the day. All right, guys, thanks for watching. I hope that you learned a lot today in terms of different types of platforms available, different fees, and why fees are so incredibly important when you're considering your investments. Remember, the goal is to always be investing long term, so don't worry about those day-to-day fluctuations and whatever you choose. You're investing for the future, and you should be thinking 20 to 40 years down the road, and you shouldn't be worrying exactly what your balance is today, what it is a week from now, because you always have to have long-term goals in mind when investing. Thanks, guys, for watching. If you could just smash that like button, that always helps the YouTube algorithm, and that'll help me grow my channel and make it the best that it can be, so I can always get you guys the most up-to-date, most relevant, and the best information on making informed choices and growing yourself financially as well. Don't forget to subscribe and then hit that little notification bell so you can get alerted every single time that I post a video. Have a good day, guys.